Good afternoon, Bob Dalton coming to you from Allendale's trading floor here in McHenry, Illinois. It is Monday, October 11th, 2010. We had grain markets, of course, lock limit up in corn, beans, and wheat on Friday. We did trade with expanded limits today, and last night we saw corn go up and test that 45-cent limit. However, as the night session moved on, as well as into the day session, it did come off of that limit, actually trade, and here's where we finished up. Corn in December at 5.55 3/4. That's up 27.5 on the day, 17.5 off of the highs. Opening up last night, we did gap higher. The gap would be filled down at 5.28 1/4 again, so keep an eye on that price point to the downside. Soybeans, November contract settling at 11.52 1/2 today. That's up 17.5. However, that's 36 off of the highs. So we did see some continued pullback there in the beans today as we got into the closing minutes of the day. Gap left in the open last night down at 11.35. So another downside objective there in the beans. Wheat today settling at 7.09 1/4, down 10 on the day, 30.5 off of its highs. So there was some excited trade coming in last night, and as the day went on and we came closer to the close of open outcry, we did see some of those highs fail and fail significantly. What does that mean? Well, in reality, when the synthetics were trading here on Friday in the corn market, we were up around 359 to 365, or excuse me, 559 to 565 in that corn. 5.55 3/4 looks like a great place to be. That's pretty much where we ended up, maybe a little bit off of the highs that we ended up in the modified markets on Friday. With the dollar today being higher, crude oil being lower, that should have added some pressure to the grains as well. I don't believe we're done going up, but I do believe that we saw some profit taking coming out early, coming out of those markets early here today, and the numbers that the USDA gave us on Friday were bullish. There's no way around that. Specifically, I'm talking about the corn. That's a bullish number. The end stock number is bullish. There's really nothing about it that isn't bullish, except the fact that they added 250,000 acres. But with all that being said and done, where could corn go from here? Allendale's projection is 650. We just went over all of our upside objectives in these grains in our research meeting, which broke out here about 10 minutes ago. If you'd like to get a look at that research meeting, give us a call, 800-262-7538. We'll let you know how to get a subscription to that information, and make sure you're on the mailing list. Soybeans, is it possible for us to go to $13 in the soybeans? Yes. All right. The reasons why are outlined in the research meeting as well. Wheat, could we see wheat up at about $8? We could. $8 Chicago probably wouldn't be too far out of the picture, but what we're anticipating is that the corn is going to have to continue going higher to pull the beans and wheat up right along with it. And again, details in the research meeting. Give us a call if you want to get access to that information. The dollar today, right now, up 14.7770. That's 55 points off of its low. You have crude oil right now at 82.22, down 44 cents on the day. That's $1.30 off of the highs. So keep an eye on that crude oil. It's been running to the upside pretty good here over the last week or two, and now it's starting to cool off a little bit. Call in for trade recommendations on the crude. Over to the livestock market, we had December fat cattle down 12.5 on the day at 98.75 is where they settled that market at. Feeders down 57.5 October at 107.15. And we had the hogs down 82.5 today, October contract at 73.70. Keep an eye on these fats and feeders with the corn prices. Right, the feeders, of course, will trade inversely to what the corn is doing. The fats, however, now there's anticipation that we're going to have a pullback in placements because of higher corn prices. So it's all going to depend on how long corn can sustain this 550 and higher price, what most of the feedlots break-evens are at, as to how many cattle we're going to get in those feedlots and feed out. The fact that we're not adding a whole lot to employment in this country is not helping the cattle market right now either, but we believe reduced placements will in fact trigger higher prices in the fat cattle. So for those of you looking to hedge cattle, maybe hold your water for right now, and opportunities may be right around the corner for us here to get some pretty good prices locked in the more deferred contracts. That about does it here for my wrap up today. You can visit us on the website at www.allendale-inc.com, or again, you can call in and talk to a broker at any time. Phone number here is 800-262-7538. Good luck trading this week.